Hello everyone, welcome. This is going to be promises to be at least promises to be yes quite a long video. We can go through a couple of key dynamics that are playing out right now and how the market itself is setting up the problems that are going to come. And yeah, there's going to be quite an example, a testimony for non-linearity of the markets and how models are usually models and our expectations and our plans and our models. Yes, most of the traders and people cannot perceive non-linearity, and you cannot prepare for non-linear scenarios effectively, usually. And let's talk about this. Let's talk about this cycle. Let's talk about China, and especially China, and how China is the key to deciphering the problems that are going to come in the next half a year, at least half a year. And then we're going to give an update on the portfolio, our portfolio allocation, what we're thinking of doing, what we are doing currently, what we're thinking of doing more. The moves right now in the markets are quite substantial, and the ones that are putting a big pressure on Chinese themselves. Let's outline the most important point that I want to make. What's the problem? What's the biggest problem currently? Let me open up HSI. This is the problem. China needs to devalue renminbi in order to support the economy. They fortunately, I don't know, they said so, that they don't want to do this. They don't want to devalue the currency in order to support the economy and in order to support their stock market. But this is the only way that's going to work. Now, there are two ways. Devalue your currency or change the trend for the dollar, or make the dollar take a significant hit in order for you essentially to relieve the pressure from your economy, to relieve the pressure from Japanese. Because what's the problem currently? They don't want to devalue the renminbi, and this move in the dollar, this is a very significant, very painful move for markets, especially for China and for JPY. This coupled with falling yen, historically falling yen, and we've been calling for 150, we're reaching 150, by the looks of it we're going to 155. This is the problem. This is a very big problem for Chinese currently. This puts a lot of pressure on the Chinese economy currently, and they don't want to devalue renminbi, and the only other way for them is to try to devalue the dollar somehow. But how can they do this, right? This chart sums it up perfectly. Without steady inflows from Chinese export machine China Inc., the PBOC cannot supply sufficient liquidity without weakening their renminbi. And we know this. And just by looking at the signal, the trend signal for the Chinese market, it looks like it's on the verge of a collapse, or on the verge of a bigger move, because, we have a catalyst, theoretical catalyst. Evergrande, the biggest property developer, are defaulted on hundreds of millions on their loans, and they on the debts, and they're going to court at the end of the next month. And let's see how this is going to pan out. But this usually, these levels and these areas in the markets never stay intact. These such an obvious levels are usually get purged essentially. There are a couple of scenarios. Either you break and continue falling lower and continue in the trend currently, or you break and reverse significantly. But one way or another, we have to see this massive move lower in Chinese stock market, and this will cause in itself will cause problems, obviously. One good example that I found, historical example, is right here in 2018. This was your incredible, just a fractal example to put it in comparison. And you see the move, and you see the reaction. Currently, I don't believe this is going to be possible. I believe that if we are breaking this level, then we are going lower. We're going back to 11,000, and this will be a problem. This will be a big problem, and they will be forced significantly with. They will be forced with the question. At this point, they will have to devalue renminbi. But there is another way, and this is how Russia comes into play. They can put an undue pressure on the dollar. Chinese can currently, but Russians can, and Russians. We know that Russians are at war essentially with European Union and with the US currently. They have to put a fatal blow. I was asking myself, what is this fatal blow that they can deal? What's the trump card, if there is a trump card? Well, there are pros and cons for this move, but it looks like it's undeniable going to have to happen from Russians. This will have to come from Russians, and this blow is pushing oil prices higher. And all they're waiting for is for Chinese to give them a green light, and to, let's say, cut their oil exports by half. This will push US Brent significantly higher. This will push oil prices significantly. But oil prices are already ripping, currently already ripping, and mind you, they are ripping with this, with the, let me do this, let me open up the Dixie. With Dixie, whilst the dollar is doing this, oil prices are doing this. Look at this. With this move, oil continue to be strengthening and continue going higher. And what does this mean? This means, in terms that inflation is not going anywhere, this means the Federal Reserve are not reversing their policy. This means two-year yields are not going anywhere. This means weakening renminbi and putting more pressure on the more dollar strength, more weakness of the JPY, more weakness of the renminbi, and something will break. Something will break. At some point, we will see a HSI or Chinese market trade lower on the back of that pressure. And when that will happen, they will be forced to devalue and or let Russians do their thing. We are into winter, and we have currently, what is it? Very tight oil market, depleted SPR reserves in the US, full oil inventories in China, elections in UK and America next year. And Saudis are no longer the best friends with Americans, and they signed a peace deal with Iran, the biggest rival enemy, by Chinese supervision. So this turns out to be a incredible opportunity and time coming into this winter, and probably the move in the Chinese equity market will be the catalyst for this, for Russians to cause a real energy crisis in Europe, because if they push oil prices higher, not like this, but significantly higher, 140, 160, 180, and they can do this. They can do this if they cut their oil exports significantly. They're just waiting for the green light from the Chinese. This will put an undue pressure. First of all, this will force Americans to cut all of their oil and gas exports, to close up and close the US system. And 30% of all LNG gas supply to Europe is coming from US. This will cause a critical energy crisis in Europe this time. Real energy crisis in Europe this time. Yes, it was painful previous winter. This is going to be much worse in Europe. This will put incredible strain on the European Union, European unity as a whole, in relationship between US and Europe, US and JPY. And one thing that it will absolutely destroy, and one way that it can cause the dollar to reverse its trend, is this one. This is essentially the biggest problem in the US currently, and the weakest spot of the US currently is this. They are doing not explicit yield curve control by shifting the issuance to the shorter term, issuing more bills and draining the SPR. We know that they at this rate they will drain SPR fully by the July of the next year, but This move in rates in the US comes on the back of a simple repricing in supply and demand. It has nothing to do, so far, it has nothing to do with this, with inflation expectation. Look how inflation expectations are completely submerged underwater. If you put inflation expectation, and inflation expectation will start moving again, and it will add fuel to the fire, it will add force more people to start to sell the US Treasury. We can see something that we've seen in UK in 2022 when the gilt crisis. We can see the US Treasury going up to not 5 but 6, 7, 8% in a straight line. If that happens, they will be forced to institute explicit yield curve control. And if they do this, this changes the whole system, the whole financial system, fundamentally. And essentially, the Federal Reserve will have to buy everything, all of the supply, all of the treasuries, essentially. The whole system, the Federal Reserve will have to buy the whole system. And the move in the dollar will be so negative, will be absolutely unbelievable. And this is what causes wars. This is what causes huge geopolitical problems. And let's see. But looks of it, people are completely oblivious to this possibility. But it is a real possibility. It is truly a real possibility because there is no way out for the Chinese. And if markets do force this upon the Chinese, if markets say their hand, and we are seeing this move, as to the Russian intentions, I have no doubts. We've already seen what they can do with wheat. They can blackmail the whole world. Essentially, they don't care what happens to the whole world. They just self-interest. They can kill hundreds of people, 100 millions of people. They don't care. Absolutely don't care. If they need to push all the prices higher, they will do this. They will. They are already going all out. They're going all in, essentially. There's nothing that they can do except the nuking somebody. They're not going to do this at this point. But the economic warfare, and if I were Russians, in Russian farm, somehow connected to the decision making, this is the weakest spot of the EU and the US currently. It's pushing oil prices significantly high, causing another round of inflation and absolutely destroying the debt markets in US and Europe. If Russians recognize this opportunity that they have, they will absolutely do this. All they need is a green light from Chinese. And this system that Chinese benefited from, this dollar system, this financial dollar system, for 20 years, and essentially on the back of this dollar system, Chinese have become what they have already become the second largest nation, second by GDP, the biggest country in the world, one of the richest country in the world. They are no longer profiting from this, and they have problems that they cannot resolve by devaluing. They can resolve by devaluing the currency, but they show that they're not going to do this, and this is the only way that they do. The signal on HSI is squarely negative. Run on tail support, bearish trend, bearish trade. It's just a matter of time when everybody is waiting in the US for something to break in for just a normal business cycle to play out. This is not going to be a normal business cycle. We're not going to see a credit event in the US. We already seen, and we are currently seeing a credit event in the China. They are not going all out in supporting the economy. And this move with this policy will just slowly accelerate until we're going to see this move, the significant move, maybe retesting the previous lows. And at this point, this most likely will be before winter. They will do what they do. Either devalue renminbi, or they will give a green light to the Russians, and Russians will cut the oil export, do whatever they need to do to push the oil prices significantly high. We shall see. It's just a theory, but it looks like this is the weakest spot of the US currently and the European Union. And if they do this, if they cause another bout of inflation, significant bout of inflation, we don't even need to see 20% headline inflation in the US. We just need to see back to 6, 7, because if they push inflation back to 6 and 7, maybe 8%. Just these numbers, just single-digit numbers. There are two possible scenarios. Either Federal Reserve are saying, okay, we're done here. We're not gonna hike anymore. Let's inflation be where it is. Then we know what's gonna happen to the long-term inflation expectation. Long-term, let's say 5 years, just 5 years. This will absolutely skyrocket to 2, 3, 4%, as we've seen at the previous cycle. And the 30-year yields will go up to 5.5, 6, 6.5, 7. And that they will have to institute yield curve control inevitably anyway. Or Federal Reserve, with this new bout of inflation, what are they going to do? Let's say they hike to 7%, 8%, 9%, 10%, in order to completely destroy the aggregate demand and completely kill the economy. Okay, let's say they succeed and inflation falls back to 0. We're going back into deflation with rates at 10%, let's say. What is the government going to do? What is the socialistic and honestly currently stupid policy and just overall the US government is going to do? They will engage in more fiscal stimulus, much more fiscal stimulus. It will be very aggressive. This will push, what will it do? It will essentially more supply, more bond supply, more inflation, yields going up again to 5, 6, 7, 8, 9%. It's just a matter of path. It's just a matter of path and timing. So this is the end game. This is essential end game. But this end game, this is a financial end game. Yes, the yield curve control and financial repression, we know that this is the financial end game. But these type of moves are usually what causes a significant problems on the geopolitical stage. This is what causes wars, and I don't know how this is going to play out in the geopolitical stage. But I'm sure that if it plays out, at least in initial steps, in this move in inflation high in European Union, they will try to freeze the conflict in Ukraine. Definitely, it will be freezed, and they will start to buy Russian oil again, Russian oil and gas. They will have no choice, or they will have a choice of completely declaring the war on Russia. Essentially, if they are smart, they will. They'll try to prevent this, but I don't know. Maybe something is going on behind the scenes, but I don't believe this. I don't believe that our politicians are acting proactively, and I don't believe that. I don't see that someone is thinking strategically. At least a couple of moves ahead, and this is the problem. This is the very, very, very huge problem and risk. And this is what the market is. This is not what I'm telling you. This is what I'm extrapolating from the current market moves, and it does seem a very alarmist, essentially, because this is conspiracy theory. Oh my God, one crazy guy thinks about the potential scenarios. These are extreme outcomes. We live in a period of extreme outcomes, and we're going to see extreme outcomes, and they will happen. And this move in the dollar is very problematic, and not that this is problematic currently for the US. US can hold this; it's fine for the US. It's perfectly nice currently, but this is the problem. This is a big problem. This is gonna get non-linear. This is getting non-linear. What are they gonna do? What are Japanese gonna do? They're gonna intervene again. They're gonna do this. They're gonna do this. It's not going to change anything. This will cause the US long end to rise even more, and this will put even more pressure on JPY, and we're going to see this move again. So they will have to what? They will have to abandon yield curve control. If Japanese abandon yield curve control, they will have to repatriate the capital. If they repatriate the capital, what are they selling? What are they selling? They're selling gold. They're selling treasuries. They're selling what's the most liquid, and they're selling. These guys, they're selling these guys, and this is the problem. We're seeing this currently happening. People are saying that this is going to happen in 2035, 2040. No, this is the non-linearity. The problems will come this time from the debt markets, the sovereign debt markets, and the trigger will be indirectly Japan leading to China leading to Russia, and Russia doing what they're doing, and the endgame is yield curve control, obviously, and this is the exit valve currently. We've been calling for this. This is the trade of the year, maybe even of decade, of century, I don't know, in terms of the moves in the treasury market. This is a problem. This is a huge problem, and this is the scenario. This is the scenario. A couple of words about how we're thinking of playing this. Oh, by the way, look what the gold is doing currently. This is a move that somebody is selling gold. Somebody needs gold right now, and they're selling gold. This is why gold currently is not a good buy, because what the yields are doing. We're entering this parabolic state in yields, and obviously it pushes gold down significantly. When the time will come, this will reverse, obviously, when they institute yield curve control and all of that. But right now, gold is not a buy. We can see gold easily going back to 1800s and lower. And I believe gold is going to 1800s. Whether it's going to go lower significantly, I don't know, but this is a problem. And if you look at this, your normal and average asset classes like equities, fixed income, gold, fiat alternatives, gold, yeah, none of them are working currently. Everything is down. The only thing that works is trend following, CTAs, and selling, and alpha generation strategies, and long volatility. And this is very hard time to play. But how we are thinking about this currently? Gold is not a buy. Gold is going lower significantly. Rates are going higher significantly. SPY, because we're not going to get a credit event, is going lower. I don't think we are completely dying here. It's not like 2008 credit event where SPY is going down to 368, 370, 350, yeah, which is no. Most likely not, but if it gets uncontrollable from here, but I believe it's not yet the time for the TOT, let's say, to do this incredible move that we've been, I don't know, maybe this will happen in the near term, because just judging by what the TLT is doing. Currently, I will make a separate video and go through a couple of trades and the portfolio updates and how people should think of playing this, because it's not an easy time to navigate through.